Welcome to The Disruption Is Now. Join us on this enlightening journey as we explore how AI is impacting our jobs, careers, lives, and the human experience. Each episode, host Greg Matusky will converse with visionaries and innovators at the forefront of AI, diving into its challenges, opportunities, and impact. So buckle up as we venture into the heart of disruption, and together, let's unfold the future.
So we're continuing our conversations here at AdviseAI. It's been a great conference. So many people talking about how AI is going to transform the advisory business, the wealth management business. I'm here really excited with my next guest. It's Charles Morris. He's Chief Data Scientist at Microsoft, if I got your title right.
Yeah, for financial services.
For financial services, and that's a lofty title. I'm pretty impressed.
It's just a way for me to reflect that I'm helping our financial services customers navigate this AI landscape. And I come from a technical background, but I try to bring it up to a level where it's more strategic.
And Charles, you were the keynote speaker this morning, and you said to me, one of your superpowers is that you can talk in crayon. So what exactly did you mean by that?
So I think oftentimes you have this divide between people who understand the technology at a deep technical level and then the people who are supposed to be able to speak about the technology. And so that'll lead to a lot of problems with people saying things that are maybe overstated or misleading because they don't really understand it. And so I have a unique skill set where I'm very deeply technical in the AI space, but I'm able to relate it to people at different levels. So whether that's an end user or whether it's an executive at a company, I'm often able to explain things and put it into what's relevant for you and get that in a way people can understand.
And that range is really wide. You were telling me before this, you spend time with the boards at major corporations who want to know how they can leverage AI to see new efficiencies, all the way down to, this morning, there were people in the audience that I spoke to who were just dabbling in AI platforms and trying to learn all they could. What is going on at the highest level? What are the expectations of AI, and are they realistic, do you think?
Yeah, so I think it obviously depends. I think some companies are more bullish and more eager than others. But I think if I take the customers who are the most successful and how they're thinking through it as sort of a template for what other people should do, it's very clear to them that this is a kind of seismic shift in what AI can do for them. And so they know that the risk of underinvesting is more of a risk than the risk of overinvesting, because they understand that they need to have a thesis about what they can do with this technology and how it's going to fundamentally transform their business. And so when you think about that, they then get to the point and they say, now where do I start? Like I'm sold. I'm going to invest in this. I believe it can transform my business. How do I do that? That's the conversation where I come in and say, okay, and so what are the most important parts of your business and how can we actually bring AI to bear there? And that's really what it comes down to, is having that thesis and then backing into how to exploit that thesis.
I want to go back to one of the things you said about the risk of underinvesting as opposed to overinvesting. I often have that conversation with colleagues in my world, and I own a large public relations agency, and our industry as a whole has been surprisingly slow to adapt, let's say, total and AI enablement, right, where they're using it to the max. And it's amazing to me that I always tell them, the point I try to make is that the risk in not understanding it is so much less if you really understand it. Because if you don't master it, even if you walk away from it in the end, you'll at least understand where it's going and what your competitors might be doing.
Right.
And yet, in my world, sometimes there's not the adoption the fast pace of adoption. I've been at this for 4 years. And I think it's just transformational. And again, it's on the generative AI side, but the ability to create content in new ways and unlock unfathomable amounts of creativity, right?
Yeah.
I read a study that 65% of us believe we have more creativity within us than we can actually express.
Okay.
And some of that is because we don't have the tools to do it, we don't have the expertise to do it. I do think AI in that respect is a real force for good, because I know in my world it helps me release that kind of vibrant creativity that I just don't have the time or the tools to do. So in the world of financial services, where do you think we fall on that spectrum as far as where are we? Are we still in the planning stage, or the ready, set, fire, oops stages? Where?
No, I mean, obviously it's a spectrum, right? And so you look at it kind of like by deciles, maybe, right? I think the top 10% of enterprises are pretty far along, right? In terms of they've built some use cases, they've seen where these things work well and where they don't, and they have a plan they're ready to exploit, right? And that's both on the tool adoption side, like, just buying and rolling out something like a Microsoft Copilot or a GitHub Copilot and doing the change management piece to get people enabled on that. But it's also like bringing new products to market. And so I think if you think about that group, it's very much in the execution stage in a way that it wasn't a year ago, where it was very much experimental. But now people have pretty clear idea of at least their general direction of a roadmap and starting to build that out.
So talk to me about that change management piece.
Yeah, it's a big part.
It's a big part. In my own firm, people find this hard to believe, but we gave 102 AI training sessions, they're about 30 minutes each, in the last year to our staff of 120 people. It's attended by 80%, which is outstanding when you figure people's schedules and demands. And that's been a big part of our change management, is that we've at the highest level, right, we've created a place where they can feel safe playing with it, and then we've reinforced it over and over again. Look what you can do. This is how you find. This is how you could do a positioning paper for a client. This is how you could do a creative brief for a client. This is how you could do a complete brainstorm session along with the client. And I was really fascinated by Copilot and some of the recent releases that allow you to collaborate with them. And what really stuck out to me in your keynote is you can collaborate along with Copilot and your colleagues. Talk a little bit about that, because I thought it was really fascinating.
And so I'll actually relate this back to what we were talking about earlier about underinvesting in change management, because I think it's a lot of technology. It's sort of like, what are the use cases that I use this for? But this is such a general purpose technology that changes so much of how we do what we do, that the risk of adopting late is actually that your sort of users and your employees need to understand like how to think differently and how to reorganize the way they do work. And so if you wait 2 years for that process to play out before you have everybody else prove the ROI is there, that means your company is 2 years behind in building that muscle, building those habits, because the tool is just one part of it. It's, even I use Copilot all the time, and there's all these ways that I could be using Copilot that I'm not yet using it for.
And in the office, I always say, go to AI first. Go to Copilot or OpenAI. Like, anytime you think you're starting from scratch, or I always say, every time you have that gnawing feeling like, I got to do this, right? Think of how AI might do it better with more velocity and quality, right? And go to it first. And I think that's a big part of it, is breaking that traditional behavioral where we feel somehow gratified in starting from scratch on something, if that could ever be. But
and I don't necessarily have a problem with starting from scratch, but it's like, what is the process of starting from scratch, right? It's often intimidating to be staring at like a blank Word document and have to write something. And so for me, I often use like a Copilot as like a help me clarify my own thinking kind of scenario. Like I'm not asking you for his thoughts. I'm saying, here's what I thought. Help me organize these. And going back to the teams concept that you just had asked about, it's like, you don't need to necessarily rely on someone always having good habits, right? Because you have sort of this Copilot collaborator that has a lot of good habits around taking notes and creating action items. And so I think that's really what it comes down to, is a lot of these AI assistants are really just going to be about the consistency of performance. Like, you on your best day, how do you think about doing something? But do you always remember or have the mental energy or attention to do you on your best day? Probably not. And I think a Copilot's going to make it so that your best days are a little bit better, but your days are more consistent in terms of performance and across your teams.
Charles, I think that's a really important point in that I've had a PR agency for 34 years, 35 years.
Long time.
And for instance, maybe you have to do a community outreach program, right?
Yeah.
I've probably seen every technique in the world, but can I remember every technique?
Exactly.
On every single day? Would I forget certain things, right? Some things are basic, but hey, didn't we once do an actual, where we bought transit advertising to impact local attitudes or perceptions? I forgot about it. I forgot about all that. So that consistency on every single day of your life, I think is very valuable as you build your career. I think it's interesting, I think the people that I've seen gain the most from AI in my firm are those who were very interested in learning it, intellectually curious, and had some deficiency. So they may not have been the best content creator, but they were committed to the firm, committed to their clients, committed to every aspect, and then they got this tool that they could exceed expectation on that one deficiency. Sure. And they've become my best disciples and ambassadors for the technology, because those people who have totally mastered, for instance, writing at the highest level for a CEO, it might lift them a little bit, right? But somebody who doesn't know that tone, who can't achieve that level, who can't understand what a CEO may express different than a subject matter expert, these tools can actually emulate that persona and help that person become more competent at what they do.
Yeah, I certainly think it's, I think if this is designed well, right, I think there's going to be a lot of bad designs that fly out there over the next couple of years, but I think the solutions that are designed well
there already have been. I mean,
of course, yes.
Look, this evolves. I mean, early in it, everyone thought it was going to be templated, right? You'd have to go to a AI product that said, this is how you write emails, right? And here's different templates for emails. This was the Jasper approach, for instance, right? An early AI model. Not so much now, I find. Am I wrong?
I definitely think the technology's gotten more flexible, right? And so but I also think
what do you mean by flexible?
So I think that's the magic of this wave of AI, is that models are instruction following, right? And they have a massive sort of language base that they're drawing on. And so, again, I think what you ran into in the past is when you're building applications, you sort of had these happy paths and then these sad paths. And if the user kind of veered off the happy path, it would cause them a lot of pain. And I think we can build applications with AI that are a lot more modular and dynamic, in that you build different pieces and then kind of assemble them contextually based off what the user is trying to do.
Put that in real world that for me. What does that mean? Crayon.
Yeah.
Pull out the crayons,
Pull
Charles.
The crayons. So real world, it's that, like, let's say I'm a financial advisor, right? We're at the AdviseAI. Let's say I'm a financial advisor. My particular client might only need these 6 specific things for this moment of this interaction that I'm going in to have with them this time. But it's coming from kind of like a repository of lots of possible things that I might want to do for a client in specific situations. And so in the past, like the templated approach you described would be like, answer all these questions about your client, and then we'll generate you a templated report. And then there's a bunch of stuff you don't really need in there. It's kind of confusing. It meanders a lot. In the Gen AI world, because models can kind of help assemble this content based on what you're asking, you'd be able to actually just get those things. So you're drawing on a repository of known patterns, but you're assembling them based on what you need to do in that moment. And I think that's a really powerful thing, because it feels like magic when that happens. When you say, hey, I based on what we talked about, here's the 6 things that you wanted, and you say, oh yeah, that's great, and also add this thing, that feels like amazing. It's an incredible sensation when you're not stuck and trapped by the templates barriers.
Right.
But you're not just like making everything up on the fly either. Right. You have something that's in between those 2 states.
Right. And that's interesting, how much you give to one or the other, how much you want to be directed, and then how much you want to freewheel it. It's funny because most of the people I work with are content creators, and they're very flexible thinkers, right? Before ChatGPT, I was once told everything was binary in AI. I may be wrong with that.
Yeah, sure. Directionally enough.
Okay. Afterwards, right, everything was natural language. And writers and creators can balance many different, for instance, you could have a writer, you could have 10 writers do a byline column for the same topic, from the same notes. Each one of them would have a different take on it, and they'd all be worthwhile. They all have value. That's how flexible the mind is of a content creator. And that's what I find so interesting with AI, is that it does play well to that flexible mind.
Yeah.
That you can go in and play it along. Maybe just I always go ahead.
Related to that, I think it's really interesting how when you spend less time doing mechanical things, you free up your mind to do value judgment things. And so you take that byline example, I might get so caught up in the mechanics of how this sounds or the way it comes across that I'm spending less time thinking about, well, what do I actually want to land as a message? And what's the order of the message that I care about? And so when you get some of the help on that mechanical stuff, right, you can actually spend more time on, well, what do I want to say and how do I want to say it? And so you change where you're spending your mental energy. And that's a really exciting thing, is I want to be spending my mental energy on things that require my expertise and my judgment, and less so on the kind of more mechanistic things.
And I call that, I always say, we're moving from the age of information in generative, right? And that is words, syntax, grammar, the Oxford comma, right? That's the data that we always used. And we're moving to the age of intelligence, where exactly what you said, we focus on that message, right? And if the data takes care of itself, we have more opportunity to really focus that message to make an impact and to improve understanding. And that's, in my job, that's all I try to do, is to make things more understandable to advance a cause, a product. But it's been an interesting talk, and I appreciate you taking your time. We usually don't land the keynote speaker as part of the podcast, so, and certainly not someone as esteemed as you in the financial services end of Microsoft. I appreciate you sitting down, and let's stay in touch.
Yeah, absolutely. Thanks for inviting me, and I enjoyed the conversation as well.
Thanks, Charles. And our conversations continue at AdviseAI. It's been a tremendous conference, and we met a lot of really interesting companies, some of them new, some of them established. And I've got a co-founder here, Brad Sparks, who actually comes from the RIA world. You have an RIA.
Correct.
And the company that they developed is Pomarium. Am I saying that?
Pomarium.
Pomarium.
It's Latin for orchard.
It's Latin for orchard.
That's right.
And
That's
you're
right.
growing the fruits of your labor in that.
That's right. Yeah, it's like the imagery is we give RIAs and their clients the ability to cultivate their own investment orchards.
So tell me how these orchards came about. What's the story? You were
In our practice, we were kind of running a traditional, investments, insurance type practice. Really enjoyed our clients.
out of Fort Collins.
Out of Fort Collins, Colorado, yep. But, we kind of got the sense that our clients viewed us more like the dentist, right? It's like we see the money guy twice a year. He says these things. We check it off the box. But Eric and I were like, hey, money's way more powerful than that. So we transitioned to being more like values-based and personalized on the planning side. So everyone got their a personalized plan where it was really focused on how do you want to be in relationship to your money? What's important to you? And we started doing things like real estate analysis or entrepreneur coaching or business consulting. But then when it come to the part of the plan that involved investing in public equities, we'd be like, hey, here's your MSCI S&P 500 80/20 port, and it was like immediately the dentist look came right back. And so
once the conversation changed from how do you become an entrepreneur and grow your business to what you should be investing in a diversified portfolio, people were like,
they tuned out.
Okay.
They're like, what does this mean? What are these phrases? What am I actually invested in? What are the fees? I don't know what's going on. And so we went to the market to try and find a solution where we could easily and scalably build personalized portfolios as a tech tool, but we couldn't find it. You know, there are some like sub-advisor services out there, but they're focused on more high net worth and maybe specifically on tax management. And so that's where we were like, hey, you know, we have a fun network of people. Like we kind of shared the idea to our network, and they said, yeah, we would love that, and we would want to build it. We want to help you build it.
So where does it go now? Because this would take a lot of technical expertise and understanding of machine learning and AI and the different platforms and APIs and everything that goes along with it.
That's right.
Where did you get that expertise from?
So Eric and I bring that kind of the subject matter customer expertise, but through our networks, Eric has a friend who's built algorithms for hedge funds and done machine learning, you know, consulting. So he came on board. Eric was like, hey, could you do this? He's like, yeah, I can do that. And he's like, all right, great. You want to do it for us? And my wife has worked in tech for 10 years. So she's had a network of people who develop and, you know, the APIs and the back end and all that stuff. And so that's where the magic has kind of happened, because where we just shared the vision and people will say, yeah, I would love to help you build that. And so we spun up a Delaware C Corp, brought these people on, gave them some equity and raised capital. And now we've got a real business that has customers and employees.
So the capital raising process, what'd you learn from that?
How long do we have? I've learned a lot. Like, you know, it always seems like there's a moving target. Like, have you hit these things? And then you hit those things, and then you go back to people raising capital, and they're like, oh, well, we wanted these things.
Were these VCs? Was this friends and family? Where'd you start?
Our first round was some customers, like some RIAs, some friends and family, and then some like professional investors who also know us. So they kind of did it out of their own pockets. And then now with this current capital raise we're on is more on like angel networks, VCs, and then I'm also reaching out to like CTOs, CEOs of like the big aggregators, like the RIA aggregators.
So walk me through what's the real value proposition here? How does it work? What's it take to get clients on board? The onboarding process. What do you have to do with this tool, and explain it to us?
Yeah, the onboarding process is it's 5 minutes with an advisor. They enter in their investment philosophy and strategy. You know, we spin that up in their own instance, and then they've got a dashboard where they can now market to clients, where they can do analytics and risk analysis. They can build custom portfolios.
Walk me through that, right? Okay. Sounds like magic. So
it is magic. Yeah, it's great.
So what am I telling you about myself that would allow you to build these dashboards about my philosophy?
Are you an advisor?
No.
Okay, like in this case, like would you be the advisor?
Yes.
Yeah, okay.
I'm sorry.
Yeah, you're good.
Not in real life.
Yeah.
I play one on TV, but...
So you would give us like your factor levers, so like the type of investment factors you want in your portfolio. You would give us your risk allocations and your preferred holdings. So we will then build you a customized, personalized list for every one of your clients for U.S. mid and large cap. We'll do it for international large cap and fixed income soon. But for all the other asset classes, you just use your preferred holdings. And whatever it is, we can cater to. And so that's like how the instance is set up then, with your framework as an advisor. And then we would take that in the software, and you get access to a unique firm link that you can send out to prospects or clients, or you can take surveys with clients. It asks them their investment values, their investment styles, their focus on investing, and their risk levels. And then we intake that, and we basically cater your model portfolio to be personalized for client A or client B or client C. And the value for that is that we just feel like as advisors, our clients are always expecting personalized services. Netflix, Spotify, everywhere you go, it's all personalized to you or to them as a customer. But we as advisors don't have the ability to do that at scale. And so that's why we built this, is to be able to be a differentiator for advisors.
So tell me some of the learnings that you've seen that might have surprised you through this whole process. Maybe philosophies that didn't match their client base, or did it surprise any of the RIAs what they were seeing once they actually saw what they were saying against what your AI was implying?
Yeah, that's maybe this answers your question. I think it does. One thing I've been most surprised about, because a lot of RIAs are like, oh, my clients don't care about values, they just care about returns, right? Like, that's why they work with me. And I think that's because we as advisors haven't had an ability to engage values in an authentic, unique way and then implement it at scale. And so now what we've seen when advisors put this type of tool in front of their clients come back to them and say, wait, I can actually say that? Like I can say that I care about this, or I can say I don't care about that, or I can say I want to invest this way, and you can do it? And then like when that light bulb clicks, we see that clients are like, I would never invest any other way. Like if I know that I cannot sacrifice returns and have my values infused into my investment portfolio, like why would I ever do it any differently?
So when we're talking about values, right?
Yeah.
Break that down for me. Is it where values in it, how I personally look at investing in my family's future, or is it values in where I want my money to go and in the kinds of companies I choose to support?
Both. So part of it is like your risk level and your financial objectives and how you think about investing, and your focus on tracking the market, or really more focused on investing in companies that you like. But then there is like the personal values piece of like, as like our society is pretty polarized right now. And so we try to give people a blank space to where if they have conservative values or liberal values or specific religious values, then we have a platform that they can say very granularly, like these are the things that me personally I care about, and then that can be infused into the investment portfolio that the advisors are.
How do you balance that? How do you balance that against, for instance, we represented a very famous person who had an anti-ESG ETF.
Yeah.
You would know his name.
Yeah.
Right? The fund didn't do real well.
That's right.
Right?
That's right.
So, like, where's that trade-off between, look, I believe in climate change, but then again, Exxon can give me real returns. I mean, how do you measure that?
Yeah. One of the things our platform does is it shows attribution reporting. So it'll like literally attribute your values to your returns. So I think that's part of the disconnect of why.
Say that again. I didn't really understand that.
Attribution reporting. So let's say,
is that a common term, or is that something
it's
unique?
like CFAs would know what that is.
Okay.
Not all like CFPs, or financial advisors would know that, but it's just a type of reporting that can attribute, differences in performance to a specific cause. So a lot of times attribution reporting could be like financial. Like, so, I don't know, I performed X better or worse because of a financial metric.
Gotcha.
But you can also do it on values. So you can say, I performed X% better or worse because I said I didn't want tobacco in my portfolio. And what we found that's really interesting is when you, in the client process, the client engagement, is if you go to a client as an advisor and say, hey, Greg, you performed 3% worse than the market because you said you didn't want tobacco, but tobacco did great this year. Are you still okay with that, or are the returns more important to you? And then because they've seen that, because they have the transparency of the data, the values, and how it relates to performance, then we've seen clients actually get really empowered because they can be like, oh yeah, that's great. Like I can take ownership in that loss or the worst performance because it means something to me. Or, yeah, you know what? I'm fine with tobacco. Like I wouldn't smoke, but let's get it back in the portfolio. And that actually builds the trust between the advisor and the client, because it's like, hey, I'm doing things that matter to you, and I'm hearing you about what's important, and I'm making changes so that's reflected in your portfolio.
And I'm talking about me.
That's right, and you're talking about you.
As the customer.
And that's what customers want. More and more customers expect things to be catered to them, their personal situation, which is what our platform enables advisors to do.
Yeah. Is there any risk in that? In that, I'll give you an example. There was one point in my life where I had to change all my Spotify algorithms because I was on this death spiral of depressing music that started with Radiohead.
Yes.
It just put me down. Finally, I'm like, oh my God, all I've done is listen to depressing music for the last month. I need to recalibrate this whole thing.
Yeah.
I need a little stupidity here. I need a Taylor Swift
the
or
reset
something.
button.
Right.
Yeah.
Like I just can't live this Well,
Yeah.
she's kind of depressing too, of all the men that she dislikes.
Her most recent album was most depressing.
Yeah,
but
so-
I kind of liked it. But,
Oh,
okay.
she's phenomenal. She's
Yeah.
from near where I live, so I'm a big Taylor Swift fan. I love the NFL. So any woman that could bring my two daughters into the room when I'm watching the NFL is right with me.
Are you an Eagles fan?
Yeah, oh yeah.
Okay, I'm a Dolphins fan. It's been a bad year. Anyway.
Anyway. So, what was my question? Oh,
It's the risk.
is the risk that you could just have an algorithm that is a little, I guess, pre-programmed and doesn't look at the whole broad spectrum of things like Spotify?
Yeah, that's a good question.
If I hear one more time Spotify serve up on my list, I guess it's Lana Del Rey. I'm getting a lot of Lana Del Rey right now. How do I break this cycle? So go ahead. I'm sorry.
We do give, because we have 4 different kind of types of data that we ingest. We have the advisor preferences, the client values, real-time market data, and then non-financial data on companies. And so, but we expose those. We expose the advisor and client preferences. So they can always be changed. So you can easily reset or rewire what your preferences are by just going back in and taking the survey or making edits to the survey and kind of changing your source of truth. So it'd almost be like if Spotify was like, hey, here's what we have for you. These are the values we have for you. Do you want to change them? That's what we have the ability to do, where in this analogy, Spotify doesn't do that. They just assume they know you better than you.
Right.
Yeah, we've exposed that kind of source of truth so that someone can always change it.
Got you.
Yeah.
All right. Well, it's an interesting concept, that's for sure.
Yeah.
And these conversations seem to be much more deep than the conversations of, what's important to your family, what's important to you.
Yeah.
But it's a great way to really pierce that and to get into another level.
Yeah.
I guess that brings us back to the point you made in the very beginning, right? In that it's just not customization, it's rather a conversation, and it's what advisors love to do more than...
Advisors are in the business of people relationships, right? And so what our tool is trying to do is enhance that. Our clients work with all of us as advisors because they trust us as people. And so what we wanted to do is to be able to take that trust and actually infuse it into our service that we're charging money for, right? Because we charge money for asset management. But right now, the relationship is built on trust, but the asset management is just built on a generic one-to-many model portfolio. And we wanted to bridge that gap. So that's what we're trying to do with our platform.
Well, it's a brilliant idea, Brad. I'm really impressed with where you're going and seeing you're not a propeller head. You're more of a relationship guy. It's a triumph to have all this technology in back of you.
It's magic. It's like I said, it's just magic.
It is magic.
It's fun.
It's been magic for me. I mean, I've been at this in AI for only 4 years. I started before ChatGPT was launched because I have a PR agency and because generative AI is an existential threat to the very thing I do, which is create content. So at a very 4 years ago, I determined that I just didn't have to know it. I had to master it. I had to really know what the risks and the potential were. Yeah. And then in of course, November of 2022, when the new world when Columbus discovered the new world with the release of ChatGPT, it was a real eye-opener. And it really played to our strengths because as content creators, we're word people. Yeah. And generative AI is a technology of language.
Yes.
So for the first time in my life, I could actually communicate with a computer in a meaningful way that resulted in something that I never thought a machine could produce.
Yeah. And it can enhance your voice and your skills.
Yeah.
That's the goal of technology, is to be able to enhance the things that we already bring to the table that's special as humans.
Right. In my game, in the communications game, really the entire pursuit is to enhance understanding, right? And that can be done in many ways. It can be done through persuasiveness. It can be done by volume, right? There's a reason they're pouring billions of dollars into political advertising right now. We all know what they're saying. It's just the repetition is very important.
Yeah.
Well, that's velocity. We can do a lot more with a lot less input all of a sudden, and have real change and help people understand each other better, like you're doing.
That's the vision. That's
between the advisor and the client.
Yes.
Well, thanks for being with us.
Yeah,
Great
thanks for
conversation.
having me, Greg. I appreciate
We're going
it.
to continue to talk to some of the participants here. It's been a great conference. How have you found it?
I've loved it. It's fun to be amongst like-minded people who are thinking forward about the industry and how to better their business. I think that's fun.
It is refreshing. I always have to steel myself when I'm in a room of individuals, maybe at a cocktail party, who just read the headlines and don't understand what it's all about, and just hear all the scaries that this is going to ruin civilization. It's going to kill jobs. It's going to it's going to create fakes and bias, and that's always a weight I carry in those conversations that I can't even begin to explain. That we're so past a lot of that and where we're going and how we're doing it. It can create deeper human relationships. Can create better human communications.
That's right. I really liked the kickoff speech with the gentleman from Microsoft who you had on
Charles
just before.
Morris,
Charles, because he really highlighted that of this is a really powerful tool that can empower people to just be better people.
Right.
And I love that.
Right. And we just have to direct it in the right ways. I see it more as a parent-child relationship. I'm not sure always who the parent or who the child is, but with the technology, it has to be up to us to direct, shape, and focus, just like it is with a child. Right?
Yeah.
They're a force for good or force for bad. It's what you want to make of it. So, and I think most of us do a pretty good job of making a force for good when it comes to our kids. I'm pretty confident we can do that with AI too.
Yeah, I think we're seeing it here.
Yeah, for sure.
Yeah.
Well, thank you.
Yeah, thank you.
Well, our conversations continue at AdviseAI, and we're going to talk about AI used in a different way. And it's interesting to me because I'm in the media. I like to, as the CEO of Gregory FCA, we deal with the media a lot. And understanding sentiment in the media is something that can give a lot of intelligence and signals. And I'm here with Rebecca Wilde. She's managing director of StockSnips. And they're doing a really interesting ETF play using AI. Why don't you help us out a little bit about exactly what StockSnips is doing and how it's really democratizing the ability to invest in AI-generated quant solutions.
Absolutely. Well, thank you very much for having me. It's a very fitting event, obviously, with this being AI focused only. So, StockSnips, we are AI-powered model portfolios, and as of April actually, ETFs. So ultimately what we're doing, we're a little different. A lot of people think AI ETFs are kind of a thematic play in that they're going to be holding AI stocks such as Nvidia, Broadcom, you name it. We're actually using AI to pick a very diversified set of US equities. For context, our founders are actually, world-class AI scientists. They boast
My favorite kind of people.
Yeah, right. They boast
Great to
over.
have a beer with.
Yes, they boast over 6 decades of kind of AI experience. Fun fact, actually, our founder Ravi Koka, his mentor, when he was kind of doing research at Carnegie Mellon University, was a gentleman named Dr. Raj Reddy. Dr. Raj Reddy was a pioneer in speech recognition. So Siri and Alexa, everything that we use today, kind of that we're familiar with, much thanks to Dr. Raj Reddy. So Ravi had a ton of experience in natural language processing, speech recognition, and the reason I say this is because this is really the core of StockSnips. So about 8 years ago, we actually started training our own large language models. So we've been around large language models kind of since they came out, and we wanted to train them to understand financial text. So as we know, as individuals, there's an enormous volume of news that's being thrown our way, and we cannot keep up with the sheer volume of news. So we've trained machines to be able to read an enormous volume of news media articles as it pertains to financial markets,
So
US
this is your
equities.
own LLM
Yes.
that's tuned for financial information,
Correct.
reviewing how many news reports a day.
Yeah, we ingest approximately 50,000 real time.
So it's reading it automatically, understanding it, and it scores it? Is that what it does?
Correct, yeah. We basically every single sentence is read, and we're determining, is this sentence positive or negative about a particular company? And what we end up with is we actually kind of translate this into an overall sentiment score, a score from 0 to 100 for each of the 5,000 plus US equities. And then we have to obviously do a lot more data science and components, but we basically rank the equities based on their overall positive sentiment to determine which stocks are statistically likely to experience a price move over the next 30, 60, 90 days, whatever it might be.
Based on the signals from those news reports.
Correct.
Now, sentiment scoring is something that's near and dear to my heart because I often have to present sentiment scoring to my clients. Very difficult because there's so many nuances, and I guess this is what isn't expected. For instance, headlines as opposed to the contents of a news report. Headlines are purposely supposed to be inflammatory, exciting, negative. That's what gets clicks. And yet the article itself could be very positive. We do this trick all the time in our media training where we show our clients how journalists will often use headlines which are disassociated from the actual conclusions of the article. So your AI is nuanced enough to understand what it means. Like there could be, for instance, a negative news report on a sector that has a positive sentiment for the specific stock that you're reviewing. Is that right?
Yeah, spot on. And this is, it's took us, for at least 4 years of research and development just to train the models to understand the nuances of financial text. Sentiment analysis is not new. We're not claiming to be the first at sentiment analysis, but where many people stop is converting it to a predictive signal. It's a very tough problem, and the reason being, as you mentioned, you can derive sentiment from a headline very easily. You can derive what you think is sentiment from an article by using something called bag of words. This is where people will go in and they'll count how many positive words, how many negative words, and whichever one supersedes, it'll kind of get that stamp of positive or negative. The problem with today's news is, 60 to 80% of articles have more than one company mentioned. And within those articles, you're going to get different viewpoints. One paragraph could be positive about one company, the next paragraph could be negative about another. So translating that into a signal that is accurate, the attribution, the classification for the specific equity, it's a very tough problem and requires a ton of kind of knowledge and expertise in that domain.
And from that, you get a signal of the wisdom of the crowd in some respects.
Yeah.
And so originally you were marketing this to hedge funds who found it very valuable, if I understand correctly. But that isn't your market today necessarily. So tell us a little bit about that sea change and what was learned from it.
Yeah, so you're correct. So obviously the sentiment data that we have garnered over this time, it is proprietary to StockSnips. So you can think of it as a new alternative data set. Obviously we have our fundamental data sets. This is kind of, as you said, a 360-degree view of what's being said about equities, because one thing we do know, and the hypothesis that really led us to start, is this notion of what people say about stocks drives price. Okay, so this behavioral notion of finance, it's really hard to quantify. So we wanted to build this data set to quantify behavioral ideas and thoughts that's in the news.
And the psychology. I mean, it goes without saying, the market's driven by psychology, right?
Yeah.
And so that's derived from the sentiment.
Correct. But to get to your point of the hedge funds, so in the early days of StockSnips, kind of as part of our validation of the data set and the signal and everything we were doing, is we were licensing this data to large quant hedge funds. In fact, some of the largest quantitative hedge funds in the world were our clients. What we learned from that is, one, they were generating alpha. Two, there's not that many large quant hedge funds that want to ingest more and more data sets. And three, most hedge funds will pay you a small subscription fee. So as a business model, It was not something that was super scalable, and we also knew the value of our signal and our data set, and we didn't want to just become another commodity data vendor. So it was kind of after about 3 years that we actually decided to stop licensing the data, and instead we partnered with a Wall Street equity research firm and some local RIAs in Pittsburgh to understand a little bit more about portfolio construction. So lo and behold, kind of 3 years on from that point where we are today, we now have a suite of 6 portfolio models which trade in SMAs, and now we have 1 ETF, and they are purely sentiment, systematic funds and models.
So tell me a little bit about the how this is democratized. A couple things are really interesting to me. Like I've been talking to some people about AI portfolios, right? And they're so weighted towards NVIDIA that it's overweighted, right? Yeah. And because of that, you don't realize that you're actually investing in the supply chain of NVIDIA, even though it's not NVIDIA.
Yeah.
So that's one kind of AI where it's thematic. Mm-hmm. But yours is more ingenious in that it is the heart of AI. It is the signal and the sentiment that flows from it. Mm-hmm. Is that a hard sell?
Well, it's getting easier because there's an appetite for education now, and there's an appetite. Before it was kind of the nice to know but not a must know, and now obviously this whole event is around AI. There's focus, and people realize that if you do not start to adopt this technology, you will fall behind. And especially independent advisors, the large institutional firms, BlackRock, JP Morgan's, they're working on this in-house, but they're going to gatekeep that for their own clients and for their own advisors. The independent advisor, this requires huge investment, I'm talking millions and millions of dollars to kind of embed this type of AI into your firm, and it requires insane expertise, which most advisors do not have on the quantitative or data science AI side. So we wanted to give advisors, our target market is independent advisors right now as we scale. This is like you said, a democratization of this powerful, potent AI technology. And to your point of the AI thematic, you'd be very surprised. Most people think AI will pick AI, but funnily enough, when you kind of dive into the weeds of news, NVIDIA, a lot of analysts who are writing the news, they might think NVIDIA is overbought, overpriced, it's not a good investment, so the sentiment is actually not that positive. And you'll find over the past kind of 3 years in our models, we don't typically hold the Mag 7. So we're getting a really unique subset of equities in terms of our holdings, giving that kind of uncorrelated return potential.
And this is all media. Is there any social media component to this?
No, we do not look at Twitter, we do not look at Reddit. We did do studies on it for some of our past hedge fund clients. The problem with social media is it's extremely noisy. So the signal, kind of the life of the signal is minutes. So unless you're intraday trading with very high frequency, it's really irrelevant and quite frankly useless. All of our sources we actually validate, so they're reputable sources. It's news that you can trust, and we vet that source for a period of 6 to 9 months to make sure that it's adding value and not just increasing a noise to signal ratio.
Is this all English language, or it's...
Right now, we ingest English language. We've been laser focused on the US markets. We can, however, the technology we've built is powerful enough to ingest an infinite amount of volume, an infinite number of languages. The only constraint that we have is garnering that news. So for example, if we wanted to look at UK stocks, then we would need to start ingesting Financial Times and the relevant media in that particular country so that we're getting the accurate sentiment based on that particular area.
Well, it is fascinating to me for many reasons. We have some overlap as far as your investors and who we represent, but also Carnegie Mellon's very close to my heart because I've written a few checks for my son's tuition to go there, and I understand their reputation. Is there any last thoughts you might want to leave us with regard to this ability and where it's come from and where it's going?
We think, I'm sure everybody's become familiar with the kind of the rise of active ETFs. It's been quite the phenomenon over the past year.
Benefactor of much of that work.
Yeah, and I think you're going to see this trend continue. The more systematization that's available through algorithms, through AI, it's really quite incredible, and it does pose. I don't think it's going to replace kind of passive index funds by any means, but it certainly gives advisors who are a little lost in the kind of stock picking process, it gives them an ability to, get some of the most incredible managers and incredible expertise in terms of quantitative ability. They can now access that very freely. So we think, the systematic portfolios will continue to increase. I think the difference that folks need to look out for is how unique are the data sets that these models kind of build off. Obviously, at StockSnips, our sentiment data is unique to us. It's proprietary to us. At some point, AI will be so accessible, so powerful for everyone that you're slicing and dicing data in the same way. It's going to be difficult to get that arbitrage. So I think for most advisors, assuming this is the main audience listening, I think you also just need to be very mindful of your claims of AI. It wasn't too long ago that a couple of RIAs, they actually got big fines from the SEC because they made some bogus claims that they were using AI in their practice, and actually when the SEC went under the cover, there was no AI at all. So I think you need to make sure that when you're vetting an AI-powered tool, an AI-powered fund, you really need to look at who built the AI. This is so important. The AI is only as good as the people that trained it. So the same way you would look at any fund out there, you look at the portfolio managers, you look at the track record, you look at the brand, kind of the reliability of the firm. You need to do the same with an AI-powered fund. The AI is only as good as the folks that built that, and with that, you're going to see a lot more of the kind of financial firms start to claim these active or systematic AI-powered approaches. Just be mindful of who actually built that. Did they come from the financial domain, or do they have deep roots in AI and data science?
And certainly you do have deep roots in AI and data science. And so we thank you for being with us. To me, it's very fascinating, and because so much of what we do at Gregory FCA revolves around the media. We're a public relations agency. It opens all kinds of questions. Could this be a self-fulfilling prophecy that if there's a signal and investors react to it, then is the next wave a negativity, that it's oversold? I mean, this really intrigues me as far as what you can pull from, again, the collective consciousness of 50,000 news articles. So it's important work. Go ahead, I'm sorry.
Yeah, no, I just want to add to that point. I think, there's been many questions. Will AI, or is this a threat to me and my stock picking process? Is this a threat to me and managing money if someone can go out and buy this on their own? And our answer to that is, folks that work with RIAs, they're with you for guidance. They still don't know how much to allocate to cash, when to get in, when to get out. So you're still required. This will never replace investment advisors. This is just something in our case that we as humans can no longer do. We can no longer keep up with the sheer volume of information that is being presented to us. And this is one of, if not the most core capabilities of AI that can be really used to enhance your day-to-day. You no longer have to sit down and try and get through thousands of articles, and you might get through 5, and then you've kind of got a bias skew. So we like to think that this is AI being used in a really practical manner. You still have to determine how much to buy, when to get in, which is your client aggressive, where does this fit? So it's no different. This is just kind of a nice niche that you can take advantage of.
Well, I appreciate your time. It's a fascinating topic, and one I'm sure we'll return to many times in the future as AI turns up all kinds of novel ways to analyze data. And this is perhaps, to me, the most interesting. So thanks.
Yes, thank you very much.
This podcast is a production of Gregory FCA. If you enjoyed our discussion today and want to continue exploring the transformative power of AI, please check out more episodes and subscribe wherever you listen to podcasts.